Hi, I'm Mal from the Money Study, bringing you another episode of our Take 10 Challenge, and we're up to episode number 52, all about this thing that I don't like. It's called your private health cover. Okay, there's my disclaimer. It's all about facts, it's all about figures, it's all about information. It is not advice. Now, when I say I don't like it, it's not mean I don't like the idea of insurance, and certainly for health reasons. It's what I don't like about it is trying to work out whether it actually is sensible for everybody or anybody. The problem is, of course, as we know, it's like any insurance, is what is it costing us compared to the benefits that we get out of it. Some people, it's a no-brainer. For other people, having this it's a borderline, and for other people, really, it could be the fact that they just can't afford it, and it may not be sensible. So it's one of those things we've got to really understand: what are we paying for? Why are we paying it? And what do we get out of it effectively before we just blindly just go through with all of this? Now, of course, private health cover, yep, insurance can help you pay your hospital and medical costs that aren't covered by Medicare. And so if we believe that, we can get treatment sooner and by having it through as a private patient, or you may not like the idea of having to go public hospitals and so forth, having that private cover is certainly can be advantageous in that regard. But it's just saying, like all insurance policies, we've just got to do a comparison of the different funds, who's offering what, and finding out what exclusions they've got, finding out what benefits they have, and doing some comparison. And again, there's a lot of different websites like CanStar and so forth that will give you benefits to do some comparisons there. Now, remembering that not all websites have all the different funds, because a lot of these funds actually have to pay the comparison website to be on it. And if they don't believe they get the value from it, from their website, they don't do it. And all of a sudden you think, well, why isn't, Bupa or one of these big funds in the list? Because they literally didn't pay that particular comparison website to be on it. So it's a bit misleading with some of these comparison websites if they're only just reviewing the ones that are paying them to be on the actual site there. So it's looking at exclusions and inclusions. So it could be a case that if you change to a new fund, there might be a time where they won't even include you at all. There might be a pre-existing condition claims. You may have a condition, they'll say you will cover you for everything bar your your diabetes or your whatever condition it may be there. And of course things like elective surgery, is it something that you can get to choose to have done, or is it compulsory service? So different funds obviously cover different things. They have different criteria, and that you certainly need to understand what you are indeed paying for. And of course, there are restrictions on how much they will pay for any one condition. It could be dental, that is capped at, you might only get $1,500 in a year or whatever it may be. In which case, if your fund, it might be 3,000, and other funds might be less and maybe more. It may be done as a family, and so it goes on. So understanding what you would do, and then looking at your family and thinking, gosh, over a year we'd probably spend X dollars. And if your X dollars is greater than the restriction, then what is it costing you to have the insurance and so forth here? So, it's a case of always just doing a bit of a homework on this. Waiting periods might apply. As I say, generally speaking, there's a waiting period if you've started up with a new fund. And so be aware that you can't just jump into a new fund because they've got better benefits if there's a waiting period, and you could then need that condition seen to rather urgently there or not. Now, of course, if you are younger, trying to work out, do I really need to have this health cover? Then understand that, of course, the government is trying to encourage you to take it out, Because you see, if all the healthy people, being the younger people, didn't have health cover, just leaving all us old people, I'm putting myself in that category, that's for sure, and we were the only ones that had health cover, then the premiums would go through the roof, because basically the bulk of the people are going to make a claim. So they need the younger people there, effectively, like everything else, we're bleeding the younger people, to put their money in, hoping that they never need to make a claim, to balance it out across all of their clients, and so therefore bringing the premiums down. Now, to encourage, and I use that word encourage in inverted commas, because this is a little bit more like coercion, they're suggesting that they want you to get it before you turn 30. They want you to get this health cover before you turn 30. Because after age 30, your premium for your health cover is going to go up. You pay an extra 2% loading for every year on your premium. So your premium's going up by 2% for every year that you haven't had private health insurance, up to a maximum of 70%. So you could be paying later on 70% when you finally do decide you need it, 70% more than the same person of the same age, literally because you didn't start it early enough. Now, if you only need basic hospital cover, so that part of it, you only need the basic hospital cover to avoid the loading. You don't need all the extras. So if you just say, look, okay, to avoid that loading, I'll just get the hospital cover. At least then I've got private health cover. I've got this private health cover, so that if I then need to add to it when I'm 40 for more chiropractic or osteopathic or whatever it may be that you think you might need, then you don't pay the loading. So you only need to take out just basic hospital cover to avoid getting that loading later on. But you can see it can make a hell of a difference if every year you do indeed delay it there. Got a bit of an example there. If you decide to get hospital cover for the first time at age 40, your loading is going to be 20% more than someone who took out health insurance before their 31st birthday. 10 years at 2% per year, 20% more, just by delaying it to the age of 40 there. So if you then, however, keep that hospital cover for 10 years without a break, and then you decide to get out of it, the loading then, if you try to get back in, doesn't apply. Because obviously you did have hospital cover when you were younger, and therefore they'll go easy on you in that regard. So there's all these other bits and pieces that get added to health insurance, which can indeed make it hellishly expensive. And as I say, whether those extras and things are needed in your particular case, in the regard that hospital only, basic cover to avoid that loading is obviously the cheapest way to do it. And that's just so you've got private health cover choices and so forth. And you may say, well, if I say the loading, I'll never bother taking out private health. I'll just rely on the private system to avoid it. But if you do take it out and then you think, well, gosh, I've got this insurance anyway, what's it cost me to get some extra bits and pieces? So I want dental, and you might just sort of stop it at the basic ones, and pretty much optical and dental and those sorts of things. You may find that because you're a sports person, that having some sort of osteo or chiropractic type help might be useful, and so it goes on. So look at your situation. What do you think is most likely to need? Now, of course, you never know what you're going to need in the future, that's for sure. Things can just come out of left field. But obviously your occupation and your interests may guide you a little bit as to what the sort of thing, and perhaps, family genes and things like that. There's, if your mum and dad both wear glasses, then you could probably expect that you might need some optical help as you get older or something similar. This question of can you self-insure meaning that the amount of monies that I spend on all of my premiums, if I was to put that aside into a bank account, would I have enough money in my bank account set aside for health issues to pay my health bills? Now, when you add it all up, if you're a reasonably healthy person, and if your family health premiums are, $600 a month or whatever they may be, but you got to put that money aside into some sort of bank account in a reasonable sort of investment, whatever, making some good compound interest, low fees and so forth, you could find you've got quite a chunk of money sitting in this investment to cover health costs. Now, it sounds like it could work. The only problem you've got is timing here, in the regard that what happens if you get sick? You said, I'm going to self-insure and I'm going to start putting the money that I was putting into premiums into a bank account, but all of a sudden, week 2 of doing that, you've cancelled your insurance, you take the money, but all of a sudden now you get sick. There's no money in the account as yet. So generally speaking, it either requires a lump of money to be put aside from somewhere else, or you're saving money while you're still paying your health cover, which could be difficult. But generally speaking, you need to have a reasonable lump in there, kick-start it, to ensure that if anything goes wrong in the earlier days, you're already covered there. I've already mentioned the fact about the comparison websites, and of course, be aware of this thing called the Medicare surcharge. Now, everybody pays Medicare. Everyone pays Medicare over the minimum threshold, and you pay this extra 2% on your salary as a Medicare to cover the cost of your public health system. But if you don't have private health cover and your income is high, again, the government is basically suggesting that they want you to have a health fund, because again, if all the rich people who can afford private health to go and use the private system don't use the health system, then it's going to be the people who basically need it to use it. So it becomes this problem again. So they're trying to encourage people on big incomes, even if they did have their self-insuring side of system going, to still have this cover. Otherwise, they get hit with the surcharge, an extra tax. And this extra tax could be another, on top of the normal Medicare levy, an extra 1.5% on top of that again. Now, of course, if your salary is big, this can be quite an extra cost. And if you're going to get hit with an extra tax because you don't have insurance, well, perhaps look at what it would cost you to get the insurance, at least get something for your money. So it may be cheaper there to get the insurance and have something than to turn around and pay the surcharge. It could be the fact that, again, you just get that private health, the basic hospital cover to alleviate this problem. You don't have to have extras to avoid the surcharge. Again, it's just the basic standard hospital cover. This is the surcharge. Must admit, I haven't looked at this slide for a couple of years, and I use it from another presentation, so these numbers may have changed. I do apologise. I should have done it before I recorded this, but I'm pretty sure these are still the relevant numbers, but probably would, if you're close, go and check. But effectively, all I'm trying to do here is to warn you that at certain thresholds here, then, yep, you get hit with the surcharge. So you can see there, tier 1, that if you're a single person, if your salary is basically over this 105,000, then effectively, you literally can indeed get hit with this 1%. And so it goes on. Over the 105, you're up to 140,000. Now you're getting hit with 1.25%. And if you've got an income over 140, you're going to get hit with a full 1.5%. Families, as you can see there, pretty much double the single, which is unusual for these sort of things. Usually it's not as expensive for, couples aren't usually double the cost of single, and so it goes on. But because there's just more people involved with the getting sick, this is the case. So for a family, as long as your income as a family is under 180, so you and your partner are earning less than 180,000, then you avoid this Medicare surcharge if you don't have the health cover. As soon as you earn more than 180, you haven't got health cover, you're going to get hit with 1% and so forth. That family income threshold is increased by an extra $1,500 for each Medicare levy surcharge dependent child. So having more kids in your family actually gives you a little bit more of a buffer there. So anyway, make sure that if you're on higher incomes that you're not going to get hit with a surcharge simply for not having the insurance. Do some numbers to work out, am I better off to pay the surcharge if you don't want the insurance, or am I better off indeed having some cover, at least get something indeed for your money? If you're not too sure how to work it out, then we can help you, guide you through that little exercise. Look forward to joining me on a completely different topic tomorrow.